I'm Max Keiser. This is the Keiser Report Boxing Day special episode. Boxing Day is a holiday celebrated the day after Christmas, thus being the second day of Christmastide. Stacey.
That sounds so British to have Christmastide. And we're joined today for this two-part special on Boxing Day from the United Kingdom, at least a dependency of the United Kingdom, it looks like Buckingham Palace. This is Simon Dixon of banktothefuture.com. Welcome to Keiser Report.
Thanks for having me again.
Did you receive any boxes for all your service to the Bitcoin community over the past year?
Just tweets, no boxes.
You know, on our Christmas week special and New Year's week special, what we like to do is look back at the year that we're just about to end and look forward to the next year. So 2020, there's no need to really discuss that. It was eventful for everybody all around the world. But as we exit 2020, one thing that stands out to me, among the many things that stands out, is that the US dollars created in 2020, the total is 21% of all US dollars were created in 2020. And we have a chart up on the screen here. And I mean, it looks as exponential as the pandemic. So what's going on? What does this bode for the future? What actually happened in 2020, and what does this mean for the future?
We're reaching the end of a debt cycle, and obviously the United States has been exporting its inflation globally due to its strength as being a world reserve currency. So China's willing to suck up as many dollars because it's been exporting goods to Americans. Americans have been consuming those goods. And because China has currency controls, those dollars end up in the People's Bank of China because the factories that are selling those goods can't actually do anything with those as dollars. And so China has now accumulated, because they don't want to hold those with bank risk, they've accumulated about $1.5 trillion of treasuries. And they've been accumulating as much gold as they possibly can. So really the United States, with this 21% of the money supply being created backed by debt over the last year, is going to be exporting a lot of the effect of that globally. And really, if we're reaching the end of a debt cycle, where do we go from here? Well, that's what we're going to see this year.
So, Simon, you mentioned we're entering the end of a debt cycle. So which debt cycle are we talking about? When did it start? And give us some characterization in terms of its amplitude and what's been going on here.
Well, it started in 1971. So this is a multi-decade experiment when we moved to a debt-based dollar standard with the Nixon shock, when this was actually taken off the gold standard. And now the supply of dollars globally has increased so significantly and so drastically that we end up with these shock events. And obviously the pandemic was the most recent shock event that allowed them to increase that money supply by 21%. And it's led to so much record inequality. So the inequality war is really what we saw in 2020, whereby this quantitative easing money, this Federal Reserve stimulus, has just been pumped into increasing assets that the wealthy already own. And really, it just goes directly into, while some of it, a few crumbs, $1,000 or $2,000 maybe, was given to the people as a check. The most of it has gone into increasing asset prices of the wealthy, causing so much dissatisfaction globally as the disparity between the haves and have-nots, where all this Federal Reserve money comes in. But also they have no choice but to do that. So what we're going to see, I believe, in 2021 is a shift in monetary policy, whereby they recognize that we're moving towards negative interest rates. We've done as much QE as can be effective. The stock markets are at all-time highs while the economy is at all-time lows. So therefore, we need to start looking at different forms of monetary policy, which is where in step the central bank digital currency that we've talked about in previous episodes, not backed by debt, not created by banks, but injected into the economy and really disrupting banks and using these central bank digital currencies to bypass the financial system.
Yeah, I want to stick on the point you just made there about America sends its dollars to China. China's got $1.5 trillion. In addition to sending dollars to China, America over the past, since China joined the World Trade Organization, America's been sending their jobs to China. So America sends its jobs and its cash to China. And then the central bank here in the U.S. says there is no inflation. We have to keep printing money to try to create inflation. And people in America are left really dumbstruck because they don't understand anything that's coming out of the Federal Reserve. It doesn't make any sense to them. Oh, how do they get away with saying there's no inflation if they have, as you point, they have sent the inflation to China in it along with the jobs, right? So it's a structural attack on the economy that they're masking behind this phrase, oh, we're trying to create inflation, Simon.
Well, China, because it has to actually suck up these dollars, they have to create more renminbi and more Chinese yuan in order to hand that out to the people that are selling these actual real goods. And obviously, we've created this structural challenge. And one of the things that we saw in 2020 was, through the pandemic, a movement more towards protectionism of local economies rather than actually moving towards the globalization, which was a trend prior to that. And so when you start to see this protectionism, whereby you have to actually look after people within your economy, you get these structural trade wars, you get these structural geopolitical wars, and more importantly, you get these currency wars, while the people are actually paying for those through hidden taxes, because when you've got this monetary policies, you've got this inflation that is, being reported as we're going to deplete your savings by 2% per year. But the reality is that, as the Keiser report has always covered, those numbers being changed so that it doesn't feel that, because everyone knows that they're actually feeling like they can buy less goods with their savings than they can today. And at the same time, you've got no opportunity for austerity because the economic situation. So the only opportunity, the only thing you can do is money printing through hidden tax, through inflation.
So there is a smoking gun that kind of points to what's going on here. The money velocity collapsing here in the U.S. So there's no economic activity while America ships all of its money and jobs to China. But in 2020, personal income was up 5.5% on the year, thanks to the stimulus, the enhanced unemployment benefits. Over 20 million lost their jobs. None of this has ever existed in the real world. So the personal income was up 5.5%, Simon. So the America shipped its jobs and its money to China. They created unemployment and poverty in America. But to make up for that, they're printing lots and lots of money. And where does this go? Where is this going to end up?
Well, again, it's the rich getting richer and the poor getting poorer. And, we talked about the inequality gaps. The inequality gaps can only really increase from here. But then there's these two counter forces, which is that if you're holding cash or if you're holding your money in dollars, then you've got to combat these inflation effects. And so you need more and more money in order to afford the same type of life. And so really the only logical step for those that don't have anything is to go deeper into debt. And when the government is actually leading by example and showing that you can just, facilitate the spending habits based upon debt, then the poor people go deeper into debt. They pay obviously much higher interest rates than those most connected to the central banks that pay the lowest interest rates. And then at the same time, you have to try and counter that. And so the reason that stock markets are at all-time high is because institutional investors recognize that, a more Republican capitalist government is no longer good for stock markets. It reduces tax, it reduces regulations, which is normally a good effect on stock markets. But now instead, they know that stock markets are equal to stimulus. And so who's more likely? Well, a democratic government is more likely to do more stimulus. And therefore, people and institutional investors now invest in stock markets based upon that. And then the smart companies, as we have seen throughout 2020 and now into 2021, are putting a percentage of their dollars, the public companies now applying to the SEC, so that they can put some of their reserves into Bitcoin, so that they can have a counterattack. So throughout 2020, we started to see more and more corporations look at how they can protect their reserves as public companies using Bitcoin, as also we start to enter governments and central banks, I think, going to be accumulating Bitcoin at the same time.
But let's go deeper into this situation that Max just described, because in America uniquely, American workers earned 5.5% more in 2020 than they did in 2019, amidst a pandemic, amidst them staying home. And the reason why is because of enhanced unemployment benefits, which saw every American getting $600 a week extra on top of unemployment stuff. So way beyond anything that was done in Europe. And so this is basically universal basic income. Are we ever going to be able to stop that? Because why would somebody want to return to work at, say, a fast food joint if they're going to have to decline, their income will go down significantly?
Well, exactly. This is a shift from, a country and an ideology that was built upon capitalism and the American dream, and the place where you can come and your dreams can come true and you can do whatever you want, to a movement to your dreams come true based upon how much money you can get from the government, which is a shift from capitalism ideology to socialist ideology. And we're seeing that reflected in many of the social movements across the country, where, really elections are won now based upon how much you're willing to give your people. And you have a next generation of people that are just, really looking for or dependent upon such handouts, because they're not even entering the workforce. They're going straight into these universal incomes. And really, America's looking, China is looking more like America, and America is looking more like China, is where we're going.
Well, we got to take a break. And when we come back, much more with Simon Dixon. Welcome back to the Keiser Report, Boxing Day special with Simon Dixon. Stacy, follow up.
Right. I have a follow-up to that last question and answer in that first segment of this Keiser Report Boxing Day special. And that is that we were talking about the fact that Americans earned 5.5% more in 2020 than they did in 2019. Now, in terms of, the significance of this paradigm shift that's happening, in 1971, the U.S. basically went bankrupt. They defaulted on $300 million worth of debt to the United Kingdom that they owed in gold, and they decided not to pay it back. Nixon closed the gold window. Now we have a situation where, basically other countries around the world, especially China, are financing the U.S. debt. And the U.S. is just ever expanding the amount of money that they give to their citizens free, where they don't have to work. More and more people are just getting MMT, UBI, all this stuff. Joe Biden says that the first thing he's going to do by executive order as soon as he gets into office is that he's going to wipe out student debts. That's another $1 trillion. Like, is there a point where the rest of the world says, we're not going to finance this anymore, or is it just too dangerous to do that?
At some stage, you would have thought that credit ratings would go down and Moody's and S&P would put down those, but that's a political move that doesn't really happen. And really, there is a point at which I think we're starting to experience that now, where the appetite for these treasuries and US debt starts to actually reach the point where people question the credit rating, but we're still not there yet. So the appetite and demand for these treasuries is still, in full swing. And at some stage, we start to, as soon as the appetite decreases, then you'll just start to see, again, a change in the way that the monetary policy actually works. So rather than actually having to sell those debt products if they no longer have the demand, then they'll just find a new money supply, a new mechanism for introducing that money. And at some stage, they'll just say, well, why are we even going via the bond? Why are we even going via the debt capital markets? Why don't we, just like, Abraham Lincoln did in the past when funding civil wars, the government just creates the money and prints off some new greenbacks. well, you might as well just do that. And so this central bank digital currency may not even be a central bank digital currency. It may just be a government issued digital currency that just cuts out the need for the central bank and just recognizes that they can print its own money. We don't even need these debt markets for it. And you move to full modern monetary theory and all of the decreases in freedom, liberty, and everything that comes with that.
So that would be a step change, a quantum change. Here in the U.S. and around the world, similar problems exist. So the IMF wants a new Bretton Woods. So tell us what that means, and will it happen in 2021? And what would the U.S. under Biden concede under a new Bretton Woods?
The IMF, the Bank of International Settlements, and the World Bank have been, trying to put together a global currency for a long time. They succeeded in putting together their special drawing rights, which is essentially a overdraft facility for countries that choose to take that overdraft. And the pandemic has led to more and more countries needing to actually take on some of these IMF loans. They're trying to get a greater foothold on all the economies. At some stage, we reach this Bretton Woods 2 moment. And because as America and the world starts to move to more universal UBI, MMT, more of a socialist type of movement, as they need to fund all these climate changes and all these things, student loans and all of these programs that they're looking to restructure. At some point, everyone sits around the table and says, well, why don't we just restructure this whole thing? Why don't we introduce, this new digital currency created on a global scale? And if you have a Democratic government or you have a Biden at the same time, then you're more likely to not necessarily defend the dollar, but try and get behind the backing of the IMF. So the last time this was renegotiated, John Maynard Keynes wanted to introduce the Bancor as a digital currency or a currency. Which was backed by gold, but instead you ended up with the dollars backed by gold, the removal of that in later, and then probably you end up with a new digital currency by the IMF backed by dollars, which are backed by debt, which are backed by nothing.
So into this mix of monetary madness and money printer go brrr, and free money for certain people around the world, we have the Cantillon effect all over the world. Some get more free money than others, but nevertheless, it's a global phenomenon. What happens in 2021 with Bitcoin? Obviously, towards the end of the year, just like in 2017, we've seen a run up, we've seen some volatility, but in 2021, we see even the likes of Citibank predicting that we could see $318,000 Bitcoin, which is probably one of the most extreme forecasts we've seen from anybody, even an OG Bitcoiner. So do you agree that that's within the realm of possibility? And if so, what does the world look like economically and monetarily if Bitcoin hits 318,000?
Well, that's a really interesting scenario once you hit. So Bitcoin reached the half a trillion dollar, $500 billion market cap at some stage. Reaching over $1 trillion really starts to get it in the eyes of many more people. What we saw, I think, throughout 2020 is more and more corporations deciding that they needed to put some of their money into Bitcoin. And I think one of the other trends that you'll be seeing is smaller countries that, individuals were making asymmetric bets where they could have above normal returns by holding Bitcoin. Corporations have started to do that. And I also think that you're going to start to see more countries and more central banks actually making those bets as well. So, the challenge with Bitcoin is it's a ruthless currency, and that there's only ever going to be 21 million of them, and more people lose them. But people start to take care of them more when you start to have this much value. You've just got the counter force And throughout 2020, those that were in the Bitcoin community, they had a blast throughout 2020. It was a crazy year. It was tragic in so many ways for so many people. But at the same time, it is one of the most interesting times we are living through in financial history. And those more and more people start to experience the utility of, many people are storing their gold in Singapore or Switzerland, and they might have been concerned about whether they can access it during these times of lockdowns that we experienced in 2020. Those that had Bitcoin that held the private key, it gives you the ability to own your own money, spend your own money, and have a counterforce against the excessive printing and the increase in the supply. People that were in Bitcoin were having a blast throughout the time. Now there's lots of volatility, and if you're new to it, you might get a little bit scared and shaken up by that. But once you've been through it and seen and experienced it through a few years, you start to realize that the fact that you have this digital scarcity, it does, and it's trying to find its price as more and more people realize that they want to own their own money, spend their own money, and counter the money force, the money printing force. That more and more people start to get to that and say you have more volatility, but you have the general trend. And so I expect more of the same throughout 2021 that we saw throughout 2020.
What's interesting, BlackRock, who the biggest money manager in the world, something like $7 trillion, they made the observation just studying their own flows of capital over their platform that people were selling gold ETFs and buying Bitcoin ETFs. Now, this is something that in the Bitcoin community we've talked about for years and saying that Bitcoin is more valuable than gold in many ways, and we kind of thought that this would be the case. But now it's actually happening. You manage a platform, and you've got all kinds of investors, and many investors are also into gold. And so how do you position this going forward? Is this an accelerating trend? Is Bitcoin actually going to start eating gold lunch in terms of capital flows are going to dry up in gold? Is that really in the cards, Simon Dixon?
No, I think gold will always be gold and Bitcoin will always be Bitcoin. The two are very complementary. So, the wealthiest in the world have always used gold as a way of preserving their wealth, of keeping their purchasing power. They don't necessarily use it as a way to increase its purchasing power as the dollar gets devalued. But Bitcoin has had a new role in the world, and that is as a speculative store of value. We haven't had the opportunity to speculate on whether a new store of value would be created. And eventually, if Bitcoin hits a certain market cap and a certain place in the world, then those that speculated on whether Bitcoin can become a store of value are the ones that reap all the growth and benefits from that. And so eventually, I do believe that Bitcoin will have a place in the world as an actual store of value, just as gold is. But at that stage, it will become a wealth preserver rather than a wealth creator. And so I think the two are very complementary. And, there are certain risks with Bitcoin. Some people believe that if the internet gets taken down, then that's when you want your gold. Until that time actually happens, if you are separated, it's very hard to store your gold, but it's a lot easier to store your Bitcoin. And so they really work off each other's strengths and weaknesses. But yeah, if you're looking in the wealth creations phase, then I expect my Bitcoin to significantly outperform any gold. But if I'm looking for just wealth preservation, then gold is a way of doing that. And the two work very complementary.
Into the Bitcoin space in 2020 came Paul Tudor Jones in the second quarter of 2020. And his entry into the space, he's a multi-billionaire hedge fund, very famous hedge fund manager. And other hedge fund managers followed him, including Stan Druckenmiller, and then the likes of BlackRock then entered. But he said something interesting, and I want your comment on it looking forward in the Bitcoin community for the next few years. Is he said that gold was a bet on basically apocalypse and humans not saving themselves and everything, all people for themselves, all individuals for themselves. Whereas Bitcoin was a bet on the future of humanity and innovation and positivity, essentially.
I think we can say that the Bitcoin community has been funded upon the possibility. The thing that got me into Bitcoin in the first place is the whole mission behind Bitcoin versus the banks. And I look forward to seeing more of that rhetoric come. Over the years, there's been lots of infighting within the Bitcoin community. But I think as we start to see more challenges with Bitcoin, it starts to return to that original rhetoric, the original vision of what this was actually created for in that Genesis block. When it originally said Chancellor on the brink of second bailout for banks, that was the original vision. And there's no doubt that gold was, has become a doomsday and a gloom. You see that if you look at the YouTube comments under this video, there'll be a bunch of people talking about how the whole world's going to end and the internet's going to be taken down and Bitcoin's so rubbish. And they're the gold people, and the Bitcoin people below this will be talking about the future and the possibilities. So I think that sentiment is really echoed, and you can see that probably in many of the comments below this video.
How about Peter Schiff? Is 2021 the year he capitulates and goes long Bitcoin and dumps some of his gold?
Yeah, no, I think Peter Schiff will take it to the grave. He's stubborn. I don't think he's going to change his mind. And that's going to cost him a lot of gold. Imagine how much gold he would have right now if he actually just took a bit of it, put it into Bitcoin and stuck to his beliefs, but actually, listen. So I think Peter Schiff has decided that that's his position. And I think that's going to cost his clients a lot of wealth.
Wow. The Oracle of the Isle of Man, Simon Dixon. It's been great chatting with you on the Boxing Day special here on Keiser Report. And, he's really helped us make sense of the 2020. Looking forward to 2021. So, Stacey.
Thanks so much, Simon.
Thanks for having me. Look forward to coming back more in 2021.
Awesome. Until next time. Bye, y'all.